you can quite easily just click on a button and all of a sudden you've applied for credit. And you might just be shopping around and online, and even going to car details, the same thing. If you might be going to buy a car and you're just looking into things, and all of a sudden you've got all these credit hits, well, they can pile up, and over time, this is something that a bank will look at. Are you being declined for that credit, or why are you having all these inquiries?
All these inquiries. I don't think people quite realise every single inquiry that you have goes onto your credit file.
There's something that's come in recently which is called comprehensive credit scoring. They're actually now reporting on how repayments are made on credit cards and loans. So a bank is actually able to have a look and see whether you've actually missed a payment on your credit card in the last 12 months, 2 years. And so it's really important now that customers understand, or clients understand, that they've got to keep track of what they're making their repayments, that there are not missing repayments. Because one simple miss now could actually mean that, a problem.
And I mean, ultimately, getting your credit file, I know, Barry, you had a system which you were able to be notified each time. Is that right?
Yeah, massive, that one. It's I think if you Google my credit file, it's an annual fee that you can pay. I cannot encourage it enough, given obviously the fraud that we've got, obviously in the society that we live in at the moment. And the online access for people. So protecting your credit file. So basically what that is that if an annual fee that you do pay, it's $80, I believe. It could be a little bit higher at the moment, where if someone attempts to put anything on your credit file, you get alerted. So straight away, it's something that you don't know that it's aware of, that you could actually go back to that provider and say, that wasn't me.
The credit scoring, it's not simply just based around the credit report. So people think, oh, you know what, I've failed credit scoring. It's compiled of so many different things and variables of a person's personal situation. So how long have they been employed somewhere? What income are they earning? How long have they been living somewhere? Assets, liabilities, there's so many different breakdowns.
Probably the best way to understand a credit scoring at a bank for clients is it's like a test. It's basically like an exam, and each question is allocated a certain number of points. So your credit file might be worth 20 points. How long you've worked with your employer is worth 10 points. And they add those up, and you either get a pass or a fail. Each bank is different, and that's where your mortgage broker can actually give you a bit of education around what they're looking for. We've also got lenders available that we can help people that might have had a bit of a hit on their credit file. So it's important to understand that even if you have had a few hits on your credit file and you're struggling with that, there are banks out there that...
Even prior, Trev, like before you make that application with that provider, and you are wanting to seek money from a bank, whether it be 6 months to 12 months or 24 months, talk to your broker, talk to your financial planner, find out, hey, if I do this, is it going to affect my credit scoring?